Hello and welcome to the Australian Market Digest Weekly Technical Analysis Report. I'm Stephen Hogan, your author of the Australian Market Digest, Senior Private Client Advisor at Novus Capital and regular guest expert on Sky Business Channel and CNBC. Before we get started this week, I just want to say a big thank you to everyone who's been following the reports for a while now. The Australian Market Digest, for those people who don't know, has been going for probably close to 12 months now. And we've trialled things and made a lot of changes there. So thank you to our long-term followers who have been reading the reports and watching the video reports more recently. And thanks for your patience whilst we trialled and errored things and made those changes. Should be all in place now. So we think we've got everything down pat and exactly the way we want it. So clients will receive, and people who receive the Australian Market Digest will get a morning summary, an afternoon market wrap, the weekly report that goes out on a Monday, which will include a video on technical analysis, and then you'll also have access to the members area of the website where we run a long-term model portfolio, which is run exactly with the philosophy of a self-managed super fund, and we also are launching today, in fact, Monday, the Australian Market Digest short-term model portfolio for those people who are looking to trade the market more on a short to medium-term basis and are looking for us to advise on the market there. Okay, so thanks again for everyone who's followed the reports for quite some period of time. And like I said, thank you all. Thanks for being patient. And whilst we've made a lot of changes there, but as I said, I think we've got everything up and running now in exactly the way we want it. So let's move forward. Okay, so just a disclaimer and warning first, obviously. Please remember that any information contained in this video report is of general advice only. In preparing this video, Novus and myself have not considered the relevant personal circumstances of any person and should not be relied upon for the purpose of making any investment decision. I am an authorised representative of Novus Capital Limited, and the opinions or views expressed in this report are the personal opinions of myself and do not represent the views of Novus Capital. Novus and myself believe the information in this report to be accurate, reliable and complete, but provide no warranties on its accuracy, reliability or completeness. Please consult a licensed financial advisor before acting on any general advice contained in this report. If you are looking for an advisor and you're not using our portfolio management services already, feel free to please contact me on 02 9375 0119 or visit my website and you can get in contact with me there, and you can also request a free consultation on the website as well. Okay, so now that that's out of the way, let's move to our first chart for the week. I just wanted to, obviously, we like to revisit the XJO on a fairly regular basis. So just looking at the XJO, there's not too much to cover there aside from what we've talked about over the last couple of weeks. You can see that I've put the Fibonacci retracement on the chart there, and we can see that the market almost came back to that 46.17 level just in there, which was the 50% Fibonacci retracement level. We rallied off that level quite strongly, put a higher low in there, and then rallied nicely up to this 5,000 level. I've spoken on TV recently and also in the reports that I thought this 5,000 level would be a key psychological level that we would actually struggle to break through, and it wasn't going to do it instantaneously, and that seems to be the case here. We've had 6 daily sessions around this 5,000 level now, and even though we have gone above it, we've come straight back down below, and it seems that the market is just struggling a little bit here to go through 5,000. This big sell-off in here obviously was, as you've heard in the media, a lot of offshore selling, and as the market came down here, I think there's a lot of domestic buying in here now, and the Australian dollar's also corrected, so offshore buyers may be looking at our market again. But I think just with the market, the recent rally here, people may just be investors, whether it be instos, fund managers, or even the mums and dads out there. I think probably just sitting back here a little bit, just waiting to see either the market come back down here and come down a little bit cheaper, or break through this 5,000 level and get closer to the previous high there again. I think just my view on the market here, I think we'll probably come back down through 49.53, the 23.6 level, and I dare say we might come back down to the 50 period moving average, 4,900, which you can see there was a support level previously. So I think we'll probably come down to 4,900 before we go any higher here. Okay, so that's the XJO. Just looking at the Dow quickly, we can see here obviously a clear uptrend here at the moment. The Dow's gone to a new high. The previous high of 1542 has been broken. We got a weekly close on Friday night at 15,549, 7 points above the previous high, and the market during the week actually got as high as 15,589. Okay, so be interesting to see if the market can go on with it here in the US now that it's gone to a record high. One thing that I did notice is price action. Sorry, let me just go back on the Dow. Price action's gone to a new high, but the oscillator has not. So you can see here the oscillator was at a very high level in here when the market was at the high there. Pulled back, market pulled back as well, obviously. And this has failed to go, the stochastic oscillator has failed to go to a new high, whilst the market has. So that just tells me we're probably not ready to go on with it here in the US as yet, and we may get some more consolidation here or trading sideways and get some sort of correction in time because, let's face it, the market has been quite strong here for quite some period of time now in the US. So some sort of consolidation or correction in time would actually bode well for the market longer term rather than just sort of heading straight up here in a line. And I wouldn't even be too concerned here if the market came back down to the 14,000 level. But yeah, I do expect the market to remain strong at the end of this year, going into early next year. And like I've said, especially on the Australian market, I view 2015 as being a very, very strong year on the Australian market as well as US markets. But what we do here for the next couple of months just remains to be unseen. Just might get a bit of consolidation as I just said there. Okay, so just looking at the next chart, AWE is a chart that I wanted to just bring up this week. Looking very good from a technical perspective. It's just broken through. You can see here this $1.40 level. That $1.40 level acted as resistance over here. You can see rejection, rejection, rejection. Eventually broke through it, but then came back down below. And more recently, we can see a double bottom in here. And the double bottom peak was exactly at the $1.40 level. And then as we come over to here, we can see that we have our first higher low in place. And the markets and price action has rallied strongly. The one thing I would say in relation to this into this double bottom is, the double bottom pattern. And I talked about this on Your Money Your Call during the week. Is double bottoms are generally they're a very easily recognizable technical analysis pattern that a lot of people look for and a lot of people trade. And because of that reason, it fails on a fairly regular basis. Double bottoms actually have a 64% failure rate, but if you wait for price action to break through the double bottom peak, which is the peak in between the two bottoms, which in this case is $1.40, if you wait for it to break that price level, then the failure rate actually comes way down to 3%. So now that price action has broken through $1.40, we can trade this, we can buy it, and we only have a 3% failure rate by knowing how to trade the double bottom pattern on a more successful basis. So I'll be buying this stock, AWE, for the short-term portfolio on Monday. with the launch of the portfolio. This will be one of the first stocks we get in the portfolio on Monday, and we'll obviously send details of that out. Okay, so that's AWE, and obviously AWE being in the oil and gas sector, everyone knows who's watched me on TV how I feel about the oil and gas sector. So we don't mind clients being overweight this sector, and if something comes up that looks very good from a technical basis, obviously we're going to trade it in that sector. We're not afraid to be involved in that sector. Okay, next chart I just wanted to bring up this week was car sales, CRZ. You can see here, I've obviously got that arrow to the downside there. What I'm just pointing out there is you can see that we've had a first leg down, which is the A leg. We've had a B leg rally. It's failed to go to a new high, starting to fall away again. And I've marked down here, I think we're going to get a C leg down. So an ABC correction down into somewhere between $7 and $8. I think the market will come back down into there, and you can see that that's been, there was quite a, consolidation over here pattern. And it found support at that $7 level and resistance at $8. So my first downside target would be $8, but I think we can possibly even go as low as $7. When we look at ABC corrections or ABC patterns, C normally equals the same length as A, or it can extend 1.6 times. So the level that the C leg has started to come down here again is obviously $10. The length of the A leg was $2. $10.50 was the high, and $8.50 was the low. So that's $2. So if we measure the C leg out, if A equals C, it'll come down to around about $8. If it extends 1.6 times, then we may go down. Price action will come down around about $3.20, which would take us down to around about $6.80, which is in this $7 region. Okay, so that's car sales. Obviously, a great business, a great stock, and it's always hard to sell a great stock. But look, I mean, this, despite the fact it's doing extremely well and it's managed very well and it's in a niche sort of market, dominating in that space. It's the price action has very much got ahead of itself and is trading on a very large PE here at the moment. I can't remember exactly what it is, but I think we're up above 30 on car sales for a price to earnings ratio. So a correction here would be good, and I'd be looking definitely to go in and buy this stock, especially if it got down to around about that $7 region. We saw the Labor government make an announcement during last week in relation to the carbon tax, which is going to affect the fringe benefits tax in relation to CARZ, and obviously that's why car sales had a pretty weak week last week. So this was something I kept looking at, just thinking to myself, what is going to be the catalyst for car sales to sell off here, because it is a well-loved stock. Forecasted earnings are obviously still very good and growing, and it's always amazing when you think a stock's starting to look expensive and starting to look a little bit euphoric. You think to yourself, what is going to be the catalyst for a sell-off in this sort of stock? Because I just can't imagine one happening. And then, sure enough, you get an announcement such as the Labor government brought out this week in relation to the FBT, and then all of a sudden you've got your catalyst for the stock to come down and sell off. So anyone who's holding car sales, my advice would be to be out of it, even though it's a great business, and then looking to re-enter somewhere in between this $7-8 region. Okay, next chart I just wanted to bring up is 7 Group, SVW, which is one we've talked about in the past. I just wanted to bring up the chart here and just revisit the chart. You can see here this $6.50 level, support here more recently again. That's why I view it as a good buy here, especially I've got this one in the long-term portfolio, but I think we're going to buy this one for the short-term model portfolio as well, because I think this is a great short to medium term buy here as well. Probably more so if looking at the overall business and looking at where price action is here at the moment. If anything, I'd have a medium-term outlook on this one at the moment. So it's probably suitable to both portfolios. So we'll have this one in both portfolios. But you can see here the $6.50 level, support $6.50, and divergence. And what I mean by divergence is you can see here the market went to a low, made a major low there. We went to a new low. But the oscillator failed to go to a new low, so that was a fairly bullish sign there that you were going to get a bounce in the stock, and sure enough, that $6.50 level very much supported it, and you got a rally of around about 70%. Back here again at this $6.50 level, support and divergence, support off this level, got a rally of around about 35%, and more recently, and you can look here again, you can see that it made a low, there. The stochastic oscillator went to a low. Then the stock price came down even further back to the 650 level, and the oscillator failed to go to a new low there again. And of course, it rallied 35% off that level. More recently, we're back. We got there again, and look, same again. Oh, sorry, no, we didn't get it on this one. We only got it on that one. We didn't get it on this one. The oscillator did go to a new low here and rallied. However, it was that $6.50 level again, and it rallied 90% off that level. And sure enough, we're back down at $6.50 again, and we do have divergence here. So we went to a low there. In there, you can see that the price action went to a low just in there. We've gone to a new low a couple of weeks later, and it's failed to go to a new low, the oscillator, and there's actually a bit of a volume increase there as well. So if we look at the rallies that we've had off this support level, we've had a 70% rally, a 35% rally, and a 90% rally. So I view this as a pretty low risk entry opportunity. Like I said, on a medium term basis, we've got this one in the self-managed super fund model portfolio, and we're also going to have it. This will be one of the first positions we take in the short-term model portfolio here as well, with the launch on Monday. Okay, so that's 7 Group. And that's it for this week. So thanks everyone for tuning in. Just in summary, we looked at the XJO struggling with this 5,000 level. We looked at the Dow going to a new high and maybe just having some sort of consolidation here. We looked at AWE being a very strong buy here from a short to medium term perspective. We looked at car sales being a sell and looking for another entry closer to $7, and 7 Group a buy down here with some pretty large potential upside. Now, for everyone who's not a client, who's just receiving the reports on the free trial, obviously these reports are just for clients only. We don't have a subscription service at this stage. If you do want us to take a look at your current portfolio, whether it's being managed by another advisor or you're doing it yourself, we do provide a free portfolio review, and in that review we'll go through if your portfolio is suitable to current market conditions, what sort of risk you're taking, what sectors you're in, and provide you with advice on generating income from your portfolio using covered calls. So we'll explain that strategy to you, which is a strategy we use for our self-managed super funds and more conservative investors. And yeah, so visit the website, go to www.stephenhogan.com.au if you would like to get the free portfolio review, or give me a call on 93750119. Okay, so I hope you all enjoyed the weekly technical analysis report this week. And once again, thanks everyone for being patient whilst we've got everything up and running here. We've made a few changes, trialled and errored things, and now we've got exactly everything the way we want it. Very excited about the reports going forward. They look spectacular, they look great, and hopefully the content that we can provide everyone in it is going to be spectacular and great as well. And we look forward to working with everyone. So that's it for this week. We'll see you next week, and thanks again. Stephen Hogan.